Hello friends, I am Kaustav Bishwas. Today in this frequently asked question series I will explain to you what is SIF. What is SIF? SIFs are designed for investors who are more informed about the markets and are willing to take higher risks for potentially higher returns. The minimum investment in the scheme is 10 lakh rupees, and they will offer a higher degree of flexibility to the fund managers compared to mutual fund managers. SIFs can have a wider range of investment strategies, equity to debt, and everything in between. However, this does not mean fund managers will have a completely free hand. There are some restrictions to ensure funds work within a framework and don't go too aggressive with their strategies. Here are guidelines for different instruments. Debt instruments. The exposure to a single issuer is capped at 20% of the total assets. However, there will be an option to increase the cap to 25% with approval from the trustees and board of directors. This restriction is intended to limit risk, ensuring that the fund remains diversified and not overly exposed to any one entity. Another exception for debt instruments, the 20% rule does not apply if the strategy invests in government securities and treasury bills. Equity. SIFs can invest up to 15% of the company's paid-up capital with voting rights. Also, they can only invest up to 10% of their NAV in equity shares of any company. The 15% limit gives an advantage to the SIFs over traditional mutual funds, where the cap is 10%. REITs and InvITs. SIFs can allocate up to 20% of their assets to real estate investment trusts, REITs, and infrastructure investment trusts, InvITs, but they cannot have more than 10% in any single issuer. It gives a level of diversification while still allowing for targeted exposure to real estate and infrastructure sectors. Derivatives. The investment strategies under SIF may invest in derivatives or derivative strategies as a way of taking exposure in the market. The cumulative gross exposure through all investable instruments including derivatives and any other instruments as may be permitted by SEBI from time to time should not exceed 100% of the net assets of the investment strategy. The following conditions may additionally be specified. The total exposure through exchange-traded derivative instruments shall not exceed 50% of the net assets of an investment strategy. Further, the total exposure through derivatives of a single stock shall not exceed 10% of the net assets of an investment strategy. The total exposure at any point of time shall be the sum of exposure through instruments in both the cash market and derivatives market. What are the advantages of SIFs? Here are some of the advantages of SIFs. Access to unique investment opportunities. SIFs provide access to specialized investment strategies and asset classes that may not be available through traditional investment options. Potential for higher returns. Due to their focused approach and potentially higher risk profile, SIFs offer the potential for higher returns compared to more conventional investments. Portfolio diversification. SIFs can be used to diversify investment portfolios by adding exposure to uncorrelated asset classes or strategies. Professional management. SIFs are managed by experienced investment professionals with expertise in their respective areas of focus. What are the considerations investors should take before investing in SIFs? Here are some challenges and considerations. High risk. SIFs often involve high risks compared to traditional investments due to their specialized nature and focus on specific sectors or strategies. Limited liquidity. Some SIF investments, such as private equity or real estate, may have limited liquidity, meaning it may be difficult to sell them quickly. Higher fees. SIFs may charge higher fees compared to traditional mutual funds due to the specialized management and research required. Disclaimer: investments in the equity market are subject to market risks. It is essential to read all relevant documents carefully and thoroughly understand the risks involved before investing. This content is provided solely for informational purposes and should not be construed as financial advice. For personalized financial solutions, it is advisable to consult with a qualified financial advisor, product expert, or product distributor. As registered financial product distributors, we do not charge any additional fees from our clients. Our remuneration is provided by the product companies. We distribute products which comes under regulatory frameworks. This effort is aimed at knowledge sharing, and we do not claim the completeness or accuracy of the content. Please refrain from making investment decisions based solely on this information.